I want you to meet Fred. Fred is an average Australian. That means he has a home loan of $360,000. Fred makes the minimum repayments, and he expects to do so over the next 30 years at a historically reasonable interest rate of 5%. What Fred doesn't know is that over the next 30 years he will accumulate $340,000 in interest charges. But Fred's not stupid. Intuitively, he understands that if he was able to pay his loan off in 20 years instead of 30, then those interest charges would be lower. He doesn't realise that it could be in the region of $150,000 in savings. So how would he pay his home loan off quicker? Well, I've got 5 easy strategies that he can follow, and you can too. Each of the 5 strategies will save Fred a considerable sum of money. But at the end of this video, when I explain what happens when he combines all 5 strategies, I think you'll be amazed. Strategy number 1. Cut your payments in half. This tried and true strategy has been saving mortgage holders bucket loads of cash for years. You take your monthly home loan repayments, let's say $2,000, and you cut that in half, $1,000. You then make that payment every fortnight. Now, as you'll be aware, there are 26 fortnights in a year, but only 12 months. So if you paid off $2,000 every month, that would be $24,000 contributed to your home loan. Whereas if you pay off $1,000 every fortnight, that's $26,000 contributed to your home loan. This strategy allows Fred to pay his home loan off nearly 6 years sooner and save himself almost $75,000. Strategy number 2, round up. By rounding up your loan repayments, even a small amount, you can make a significant dent in your home loan interest charges. Fred's home loan repayments are $1,951 per month. If he rounds that up to $2,000, he'll pay his home loan off nearly 18 months sooner and save himself $20,000 in interest. Strategy number 3, take advantage of extra funds. An offset account attached to the home loan account can act as an everyday transaction account or a savings facility. But what it means is that the lender will only charge interest on the home loan amount minus any funds sitting in the offset account. So if Fred had $5,000 sitting in the offset account and his loan balance was $360,000, the lender would charge interest on $355,000. If Fred maintains $5,000 in his offset account for the life of the loan, he will save himself $17,000 and pay his loan off nearly 1 year sooner. Strategy number 4, compare your rate to the market. Now this seems sort of basic, but in 2015, a Queensland University of Technology study showed that Australians miss out on nearly $3 billion worth of interest every year through what is labelled the lazy tax or home loan apathy. I want that to sink in a bit. $3 billion every year. Another set of data was released this year by Pocketbook, which suggested that almost 90% of Australians don't know what their home loan rate is. Here's what I want you to try. Ring up your lender and ask them if your rate is as sharp as it could be. I did this once, a long time ago, and I saved myself $50 a month just with one simple phone call, without even considering changing banks. As for Fred, if he changes his home loan from a rate of 5% to one with a rate of 4.5%, he will cut his home loan by 3 years and he will save nearly $75,000. Refinancing can be a hassle, but it seriously pays. Strategy number 5, make micro payments. For a long time, people have espoused the benefits of taking your spare change home at the end of the day, putting it in a jar, and taking that jar to the bank at the end of the year to make a significant repayment on your home loan. But I'm finding these days that I'm handling a lot less cash. Between PayWave and internet banking, online shopping, the amount of spare change that I take home at the end of any given day is a fraction of what it used to be. So here's a great strategy to get around this. Collect your receipts. At the end of the day, add up what you've spent and pick a percentage, whether it be 5, 10 or 20%. Take that portion and pay it off your home loan. Even if you only do this with groceries, you'll find that you're making lots of smaller repayments that you'll hardly notice over time. Fred, being an average Australian, spends about $200 a week on groceries. He's going to take 10% of that, $20, and make that as an extra repayment on his home loan. Suddenly he's paying an extra $80 per month and he barely misses the $20 a week that he would have otherwise frittered away through mindless spending. And he's going to save himself $35,000 and nearly 3 years of his home loan. So what happens to Fred if he takes up all 5 suggestions? Well, his repayments are $1,951 per month. He's going to round that up to $2,000. He's going to cut that in half, $1,000, and pay that every fortnight. He's going to get an offset account and maintain $5,000 in it for the life of the loan. And he's going to refinance from a lender charging him 5% to a lender that will charge him 4.5%. He also makes lots of smaller repayments along the way to the tune of $20 per week. Fred will now pay off his home loan nearly 10 years sooner, and he'll save himself $148,000 in interest. So what's your next move? I'm Brenton Henry, this is the Essential Money video log, and until next time remember, it's essential to plan your tomorrow today.